going to go to tab 19. Robert and Adam are going to present an economic quarterly report, present the good, and I know some of the bad as well. Well,
good morning, Chairman and Commissioners. Robert Chandler, Director of Economic Growth. Before I get into the presentation, I did want to acknowledge our two new employees in the Economic Development and Tourism Department. We've got Sam Weekly, who will be our Northwest Coordinator, that's the Leesburg region, and we've got Brandon Matulka, who will be our South Lake Coordinator. So very excited to have them on board. They've already hit the ground running, already started doing their site visits and starting to get out there into the community. So we're happy to have them here, and thank you for acknowledging Shane's appointment. That's a really, really big deal and is a good feather in the cap for Lake County and for Shane, obviously. So what a great time to come up here and give an economic outlook, right? This is a lot of stuff going on out there, and want to make it known that we put this presentation together through the end of December and early January. So some of these numbers in here might be changing a little bit. At this point, it's hard to tell where we really are given everything that's going on in China and with oil prices. So it's going to be kind of a bumpy road to figure out whether we're heading towards a type of economy that might see a recession or whether this is just a little bump in the road. I think it's interesting to note that today oil prices did rise a little bit based on some of the Chinese numbers. It's back at around $30 a barrel. And in China, the stock market actually did come up a little bit because of forecasts of some monetary easing, and then their GDP, which actually was at 6.8%, which I think is pretty amazing considering ours hovers much lower than there, but it was the lowest GDP growth in 25 years. So a lot of conflicting factors out there, but let's get into this outlook. At the bottom line, I think what we're looking at is most economists and forecasters believe there's probably a less than 50% chance of a recession. With that said, that certainly means that there is a chance of one. So some of these numbers might look a little bit different, but I would think that with correct policy, hopefully we can avoid that recession, and that means national policy, and that hopefully some of these numbers will actually prove to be correct. So now, the purpose of the presentation is to provide a historical overview and forecast for national, state, and local economic indicators to be considered as part of the fiscal year 17 budget process. First, we'll look at the national overview, then we'll get into some of the national economic indicators, look at state, regional, and local overview, get into the economic indicators at that level, and then we'll look at the summary for Lake County. National overview, we're 6.5 years into the current recovery. The average since World War II is 5.5 years. So that's one of the indicators that we might be ending this recovery. Now, the fundamentals of this recovery have been different. The pace of growth settled around 2 to 2.5%, which is reflecting a downshift in both labor force and productivity. Unemployment has declined quickly, yet labor compensation has remained stagnant. All of these things are fundamentals that we have not seen in previous recoveries. Equipment spending has settled into a lower pace of growth despite consistently low interest rates. Housing credit has become more restrictive on the supply side. The millennial generation has raised demand for urban housing. That is a difference that we've seen. And the continued low inflation and interest rates. So all of these have changed the way this recovery has looked compared to what we've seen in the past. And when we look at 2015, 2015 was relatively consistent with 2014 despite the plunge in oil prices. Consumer spending was the largest contributor to GDP. Consumer spending definitely drove the economy in 2015. Net exports were a drag on economic growth due to the gaining strength of the dollar. I always find that interesting that as the dollar increases in strength, it hurts our net exports. Profits are increasing, but rising labor costs are limiting those increases. And sectors of our economy tied to the global economy have experienced challenges, a trend which should continue. So we did enter 2016 with some positive momentum. Obviously, things have slowed down based on some of the concerns with China and oil and some of the emerging economies. We'll expect less job growth in 2016, but higher job growth quality. So looking for new jobs with higher wages in 2016. Improvement in employment and earnings should support consumer confidence and household formation. And again, those concerns in China, concerns over oil, could be a drag and will certainly have an impact on the national economy. So we're going to look at some of the indicators: GDP, interest rates, inflation, business spending, energy, and retail. National GDP, real GDP growth in 2015 slightly topped the average of the 6.5-year recovery at 2.4%. Domestic demand is poised to grow solidly in 2016. Based mostly on consumer spending, which makes up 2/3 of GDP. The strong U.S. dollar will continue to discourage exports. Slowdown in China will be a drag, and overall GDP should increase to about 2.5% in 2016 and 2.6% in 2017, based on most economists' projections. I would like to say that most of these numbers that are in here are a combination of research that I've done looking at Wells Fargo, looking at Kiplinger's, and other national economists. So these numbers are reflective of those forecasts. So here's the GDP growth. You can see 1.5% in 2013, 2.4% roughly in 2014 and 2015, and then our projections for 2016 and 2017 are just slightly higher at 2.5 and 2.6%. Interest rates. Federal Reserve did raise short-term interest rates to 0.25 to 0.5% in December of 2015. That was the first interest rate rise in 9 years. That increase was tied to the improved labor market conditions and a small upward trend in the inflation rate. Economy is finally strong enough to withstand this rate increase, but we do not look for many more increases in the future, based largely on what we've seen over the last few weeks. Long-term rates are likely to stay relatively low, and future modest gains in short-term rates are expected. So not looking for any large increases in the interest rate. So federal funds target rate. This is the average over the entire year. That's why it's not a clean 0.25 or 0.5. And in 2015, you see that's 0.31. That's largely low because of the raise to the 0.25 there in December to 0.5. Looking at 0.88 in 2016 and 1.88% in 2017. When you look at the 10-year Treasury note, again, that looks like to have a small increase to 2.53% in 2016 and then again in 2017 to 2.8%. Looking at inflation, inflation in 2015 was relatively flat at 0.7%. Expectations are for increased inflation in 2016. Declines in energy prices should end and medical care costs should increase. Again, those oil prices have come down currently, but a lot of expectations that those will rise again, not to anything we've seen in the last few years, but certainly over where they are today. In 2015, food prices were impacted by the worldwide decline in commodity prices, but those pressures should subside dramatically in 2016. Prices for services should rise 3 to 4%. And the core rate of inflation, which excludes food and energy, should exceed 2% in 2016 and 2017, and that's really the targeted rate that you'd like to see. So you can see the core consumer price index. That's the measure of inflation, again, without food and energy. 1.7 in 2014, 1.8 in 2015, going to 2, and then 2.1. So moderate inflation and really what you would expect in a healthy economy. Business spending. Modest increase in 2016 is expected after a flat 2015. The pre-Great Recession spending gains were in the double digits, so above 10% every year increase in spending for businesses compared to 4% average over the last 3 years. So we've had a substantial drop back in business spending since the recession. Spending in 2015 was heavily impacted by a pullback in spending by buyers of manufactured goods, but most economists think the worst of the spending cuts appears to be over. New orders, excluding aircraft, increased substantially in the fourth quarter of 2015. Domestic demand for goods is increasing, and we're expecting a 4.2% increase in 2016. So again, not getting back to some of those double digits prior to the recession, looking at 4.2% and then 4.9% increase, relatively flat from what we've seen in the last 3 years. Energy prices, crude oil, have fallen 50% since the spring of 2015. Everyone knows this. You see it in the news. Lowest prices in nearly a decade, caused by oversupply, a strong dollar, the global slowdown, China especially, Middle East tensions, technology enhancements have allowed more extraction but less expenses. Output has been trending lower for months, which hopefully will limit further declines beyond what we're seeing here recently. Gas prices are unlikely to fall much farther. They really just can't. And then crude oil expected to be relatively flat in 2016 before hopefully a slight improvement in 2017. So again, we're looking at the average over the entire year. So we're around $30 a barrel now. Hopefully that can improve some. I would say of any of these projections, if you think they're going to go lower, it's probably this chart here. That 51.8 for 2016 dollars per barrel is probably high. In terms of retail, buoyed by job growth and cheap gasoline, consumer spending drove the economy, as I said earlier. Sales of clothing, electronics, and sporting goods, as well as groceries and personal items, finished the year strong. Holiday spending was strong as well. Expected that it would come in at over 3% over last year, and retail sales are expected to grow at over 4% in 2016 and almost 5% in 2017. So here's your national forecast summary. GDP is looking to be up by 2.5%. Interest rates up slightly. Inflation up to 2%. Business spending up a little over 4%. Oil will be down on an average to $52 a barrel. I think that will probably actually be more than that. And then retail sales up 4%. So let's get into the state, regional, and local overview. We'll start with Florida. Florida's recession ended in 2012. The real gross state product improved only 1.7% during the first year of the recovery. Very slow. In 2013, the economy accelerated a rate of 2.5% due to rising consumer confidence, improved housing, population growth. Population growth has exploded again in the state of Florida. We were averaging a little over 400,000 people per year prior to the recession. It was thought that that number might not ever get back over 200,000, and we're almost back to 400,000 again. So population growth is again driving Florida. So those numbers in 2013 have continued, and we saw 3.3% growth in 2015. Growth in Florida is expected to be solid but not spectacular over the next few years. GSP should outpace the national average. Some positive factors are continued diversification of the economy. We've always been a tourism-based state, a lot of service-oriented. We see manufacturing coming back. We see healthcare. We're seeing a lot of professional and business services. So the entire Florida economy is starting to diversify. Housing market's improving. You've got tremendous job growth gains as well as labor force improvement. Drilling down a little bit more to the Orlando MSA, which includes Lake, Orange, Osceola, and Seminole counties. It will show varying strengths and weaknesses in 2016. Job growth, population growth, and gross metro product will all be top three for metro areas in the state. So Orlando MSA is doing exceptionally well in a state that's doing exceptionally well in the nation. So we're very fortunate to be a part of that MSA, and we'll certainly feel the benefit of that. The flip side of that is wages continue to lag behind national averages. That's not just a Lake County problem, that's an Orlando MSA problem. Technology and business services sectors are experiencing significant growth as well as healthcare, and that should drive the Orlando economy here moving forward. Going down again to Lake County. Lake County is poised for significant gains in 2016. I don't think there's any way around that. That's assuming we don't have the larger global recession. 2015 saw job growth and labor force growth return to pre-recession norms. We're back to growth levels on a year-to-year basis, equivalent to what we saw prior to the recession. The unemployment rate dropped below the state average despite a substantial increase in labor force. So I've talked before about labor force numbers going up. Typically that keeps your unemployment rate up as well. In this case, we've dropped our unemployment rate in addition to having improved labor force participation numbers. Residential permit activity continues to rebound and is quickly approaching pre-recession norms with single-family homes. Wages continue to lag, but growth has been in line with regional statewide averages. Our nominal wages are low, but our growth is keeping up. As the MSA population continues to shift, development pressures to Lake County, the MSA is growing, that growth is pushing out into Lake County. We have ample supply, we have low costs, and we have increased transportation connectivity, which is really increasing and improving our attractiveness and desirability as both a residential and commercial destination. Current planning efforts will have a marked effect on quality and volume of future growth. So when you look at the Wellness Way area plan, you look at Wolf Branch Innovation District, Mineola Interchange, what's going on at 470, all of those things combined are really going to change the dynamic of growth here moving forward in Lake County, both from a residential and a commercial standpoint. New business formations are increasing. The regional branding efforts are beginning to have an impact. So you don't know half of it, and everything the Orlando EDC are doing, we're starting to see an impact on that, on the way the nation views Orlando, not just as Disney World, but as a place that you can come and do business and have a good quality of life. Job growth and wage improvement are expected to improve relative to the region. Let's get into the forecast for some of these indicators here on the local level. And all the other graphs I will show Florida, Orlando MSA, and Lake County. And this one, we don't have a Lake County gross product. So what we're looking at here is the lighter blue is Florida, the darker blue is the Orlando MSA. So this is the gross product. You can see in 2013, Orlando MSA was significantly higher. Then you've got 2014 at 3.2%, 2015 at 3.1%. In 2015, we're expecting the Orlando MSA to be significantly higher again than Florida, and then 2017 back to around 3.3%, which is close to what you're seeing for the state. All right, so here we've got employment year-over-year percentage change. We've added that third bar. That would be Lake County. As you can see, employment has trended a little bit above the state, but below the MSA. The projection is for that to continue. We're looking at about 2%, a little over 2% growth in both 2016 and 2017. So that's, again, for employment. Those are folks that live in Lake County and have a job, regardless of whether they work in Lake County or in the region. The unemployment rate continues to come down. As you see here, where it says 5.4% for 2015. Again, that's the average for the entire year. We're at about 4.7% now, I believe. So when you look at the projection for 2016, the average is expected to come down, and then again in 2017, puts us slightly above the MSA, but below the state. Single-family housing starts. Single-family housing starts are a lot more consistent than what you would see on the multifamily side, and I'll show that in a second. But as you can see, our numbers have been significantly higher than the state and the MSA from a growth perspective. It is important to note that our numbers are lower, so it's easier to get those higher percentages. But the fact remains, single-family growth has been strong in Lake County for the last 3 to 4 years. The projections are for us to continue to be above the state and the MSA in single-family growth. And what you're looking at, just to give you an idea of the numbers here, we're looking at 836 single-family permits in 2012, 1,300 in 2013, 1,700 in 2014, 2,300 in 2015. So those numbers continue to decline, and we expect similar type of gains in 2016 and 2017. When we look at multifamily, that's a whole different story. Now, multifamily in the rest of the MSA can have fairly consistent numbers because you have fairly consistent growth in the multifamily arena. In Lake County, those numbers are not the case. So you can see here, 92% drop in 2013, almost 15,000% growth in 2014, back to a drop in 2015, and then we're expecting nominal gains in 2016 and 2017. The reason for that is the small numbers. 52 multifamily in 2012, down to 4 in 2013. In 2014, what happened? You had the impact fees went up in January of 2014, went up to about 600 multifamily permits. So that sucked up all of the future permitting that was going to come in for multifamily, and then it dropped to 28 in 2015, largely in response to that, I believe. So that's why you see the drop of 95%. So when you look at single family, numbers look good. Multifamily, really in Lake County, we do have a multifamily housing shortage from that perspective in terms of growth. So hopefully we'll see that improve here moving forward. Average annual wage, again, what you see here is Lake County has been trending at the same pace with the rest of the region, with the state. 2.3% last year. We're projecting 3% in 2016 and 3.9% in 2017. So those numbers hopefully will continue to increase, and we'll be able to keep track with the rest of the state and the region. Now, this is a number of taxable property values. The source on there is incorrect. This is actually from the Florida Annual Tax Revenue Conference. And what these numbers is what are showing is what that conference predicts for each county, for the state, and for the MSA. So you can see here what that conference predicted for Lake County is a 6.7% increase in taxable values in 2016, and then a 7.6% increase in 2017. Those are not necessarily the numbers that we're going to be using here and that Steve's group will be using. That's just what the estimating conference has projected for Lake County. And in those cases, you can see that those are above state of Florida and the Orlando MSA. So that conference believes that Lake County's got at least a future that's a little bit brighter, hopefully from that perspective, than what you would see in Florida and the MSA. As a summary for Lake County, we're looking at a 2.3% increase in employment. Unemployment hopefully will go down 0.5 percentage points on average to 4.9%, which means we could see actual lows at the low point in the year significantly below 4.9. Single-family housing starts up 25%. Annual wages up 3%, taxable values up 6.7%, again, according to that conference, and then multifamily housing starts up 10%. And that concludes my presentation. I'm happy to answer any questions.
Thank you, Robert. Great presentation as usual. Commissioners, questions or comments?
I just had a couple. I want to go back to that chart, that taxable property values chart.
Yes, ma'am.
So when you go to 15, you see, I guess it's, the Orlando area going up significantly. I guess I'm looking at our green bar, and it's just stepped up gradually, as opposed to what seemed to be happening was there was a lot of new activity in Orange County.
Right.
But we weren't seeing that. We were behind. We were lagging behind, and now we've caught up to a certain degree, but ours has been more of a gradual. Is that?
That's correct. And I think what you'll see is that Lake County is always going to be lagging. So whatever you're seeing from the MSA side of things, Lake County will be behind that, which I actually look at as a good thing for Lake County, because if you see that happening in the MSA, as long as more global and larger indicators don't impact anything, you should start to see those impacts trickle down to Lake County.
And one thing I would request, and I think we talked about this before, and I'm not sure how hard it is to extrapolate the data, but could we get a breakdown maybe at the next meeting or next month on the South Lake versus Northeast versus Northwest part of the county so we can get a feel for those building permit?
Absolutely. That'll be in my next presentation.
Okay.
I've got that in there. And then tracking that against the values.
Okay. And then one other thing that I thought would be helpful as we go forward in the budget process is also a breakdown of when we look at the taxable value itself from the standpoint of new value added versus existing values and the amount of increase in the appraised or assessed value of the existing.
Absolutely.
Value added from growth.
Right, so we can at least get a feel for how much of the new value is attributed to actually having more residents and more demand for services versus just an overall improvement in the economy.
Absolutely.
We'll get in that in the budget, because that happens later on
Okay.
in the budget process.
Commissioner, any other comments?
Yeah, and there was one other question I was just curious about. When they do population projections, are they factoring in, because we have a large senior population, and do they factor in, that net change, or is
Yeah, they
just how many
do,
people are
and
coming
it's,
into town?
they typically will do a linear type of projection by county, and then, at least with Bieber, and then they'll come back in afterwards and adjust for
Okay.
each county based on the unique factors that are found in that county. So demographics would be a piece of that, different types of economic forces. So I think Lake County, they would look at and say, what's happening in the MSA, and then how does Lake County compare to that from either are they lagging or are they leading, and those types of numbers. So I believe so, yes.
Okay.
Is it all right to call you the Commissioner of Death?
No, it's not okay to call me that. It just dawned on me that, we're so focused in Florida on how many people are moving here, and I just wondered whether they
How many
actually
people are
take
moving
into
out?
account,
That was a good point.
We'll just call it moving out. We'll just say it nicely that way.
Moving up.
Yes. Commissioners, any other?
No, great presentation. I look forward to the follow-up because
Yes, me too. Maybe.
it's the key as we move forward, because while we can project everything in the world, it's the best guess, and property values is a great example of that, but because so many of our residential units are in the Save Our Homes program, you're not going to see substantial growth as far as property values growing up there. So it's going to be interesting as we move forward.
Robert, one of the state economists, Sean Snaith, had recently talked about using some new metrics, or he was going to look at new economic metrics. I'm not sure if you're aware of that. I saw.
I'm not.
Okay.
But I failed to mention, it was on the graphs, but almost all of the MSA factors and indicators were from UCF and Dr. Snaith, so those are
Okay.
reflective of.
So if he changes something, you're going to use his data? next
Absolutely.
time.
For the MSA, he's the best there is, so that's what we use.
Gotcha. Okay.
Okay, I have one other question that came to mind. When I'm looking at the charts and all the focus is on housing starts, what about the commercial side? Because we talk a lot about how we're lagging behind in Lake County as well from the standpoint of the proportion of commercial and industrial versus residential. And that's really where if we could catch up in that regard, then we could equalize a lot of things, even right down to the amount of money that comes in per student for our school district. So I wondered if there's a way to actually quantify that and take a look at what's happening in the surrounding counties versus our county, and to what degree would we have to make a shift to have a significant
Right. Okay, we can look at that.
difference?
No problem.
Good question.